All right, ready to dig into some EU crypto regulations?
Always up for a deep dive.
Today, it's all about MiCA, the Markets in Crypto Assets regulation.
We're talking serious regulatory frameworks here.
We've got excerpts from this dense ESMA report, and let me tell you, it's not light reading.
Yeah, it's pretty intense.
But we're focusing on two key things: sustainability and transparency in the crypto world.
Definitely hot topics these days.
Think of it this way. The EU is saying, hey, crypto, we see you, and we're not ignoring the environmental and transparency concerns.
It's a clear sign they're taking this space seriously.
Okay, so first up, something you might not expect in the tech-heavy world of crypto: sustainability.
Interesting, right? You wouldn't think Bitcoin and saving the planet would go hand in hand.
Yeah, it seems like a bit of an odd couple.
But MiCA actually mandates that crypto companies operating within the EU have to disclose the environmental impact of what they're doing, especially their energy consumption.
So no more vague claims of being eco-friendly.
Nope. MiCA wants cold, hard data.
We're talking energy use per transaction, greenhouse gas emissions, even e-waste from those power-hungry mining operations.
It's like the EU is putting crypto under a microscope, an eco-microscope.
Exactly.
And this is a big deal because it pushes the industry to adopt more sustainable practices. Like, we might see a shift towards those proof-of-stake blockchains, which are way less energy intensive than the proof-of-work model Bitcoin uses.
Right. It's like choosing between a gas guzzler and an electric car for your crypto.
Perfect analogy.
And MiCA doesn't stop there. They're even talking about a potential energy consumption threshold.
Oh, you mean where crypto assets that go over a certain limit would face even stricter rules?
Exactly. Almost like an energy efficiency label on your Bitcoin.
Can you imagine trying to explain that a few years ago? It shows how serious they are about making sustainability part of the future of finance.
Absolutely. Okay, so we've seen how the EU is tackling the whole environmental impact of crypto with MiCA, but let's move on to another big one: transparency.
Yeah, because the crypto market can feel a little bit like the Wild West sometimes.
It really can. Like, you
Yeah.
never really know what's going on behind the scenes.
Exactly. And that lack of transparency has always been a huge concern, especially for regulators.
Rightly so. So how does MiCA aim to, shed some light on those dark corners?
Well, MiCA lays out rules for pre-trade and post-trade transparency, kind of similar to what you see in traditional financial markets.
So more like a level playing field.
Yeah, exactly.
So in practice, what does that actually look like?
One of the key things is that trading platforms would have to make their order book data public.
Order book data. Sorry for those of us who aren't, Wall Street whizzes. What does that even mean?
Sure, sure. Basically, imagine a list of all the buy and sell orders for a certain crypto asset, showing the price and the quantity for each order. Making that public just gives everyone a clearer picture of what's happening in the market.
Ah, so it's like everyone gets to see the cards on the table, so to speak.
Exactly. Makes it a lot harder to cheat or, manipulate the market when everyone can see what's going on.
Makes sense. So it's about building trust in a market that can feel, frankly, kind of shady sometimes.
Totally. Especially for those who are new to crypto, this kind of transparency can make it feel a little less intimidating, a little less risky.
For sure. So everyone wins, right?
Well, hopefully. Now, here's where it gets a little more complex. MiCA also addresses something called automated market makers, or AMMs.
Okay, and what are those?
So AMMs are basically algorithms that kind of facilitate trades, but they don't have a traditional order book.
So how do you create transparency when you don't even have an order book?
Yeah, that's the million-dollar question. And MiCA
No.
acknowledges this, recognizes that AMMs are a different beast. With a traditional order book, you can see the trading activity, look for signs of manipulation. But with these AMMs, it's all algorithms, so it's trickier.
Right. How do you catch an algorithm cheating?
Exactly. But MiCA still wants to ensure there's transparency, even in these, more automated systems. And that's where the ESMA report comes in. It goes beyond just saying AMMs need to be transparent. It gets into the nitty-gritty of how that data should be published, what it should include.
So they're really digging into the details here.
Yeah. For example, they talk about the need for data to be machine readable.
Which basically means?
It means that the data needs to be in a format that computers can easily understand and analyze. We're not talking about like PDFs hidden on some website somewhere.
Right. It needs to be accessible and usable.
Exactly. For
Yeah.
everyone, not just tech experts.
So we've talked about sustainability, transparency, but what happens when things, go wrong? Because let's face it, even in a perfect world, systems can crash, right?
Absolutely. And that's where business continuity comes in.
And that's another thing MiCA gets into.
Oh yeah, it's a big one, especially with crypto being all decentralized. You see, even with the best intentions, disruptions are going to happen, and MiCA gets that. Crypto might be its own thing, but it's still part of this bigger financial system.
Right, so if one part fails,
They can have a domino effect.
exactly. So how does MiCA want crypto companies to prepare for those uh-oh moments?
Well, we're talking about everything cyber attacks, technical issues, even problems with the blockchain itself.
Wow, okay, that's a lot. But isn't that, like, out of their control if we're talking about a truly decentralized blockchain like Bitcoin?
That's the interesting part. The ESMA report actually talks about this, the difference between problems a company can control and things they can't.
So, like, they're not responsible for Bitcoin crashing, but...
No. But they're responsible for their own systems, their own security, and for having plans in place if things go wrong, regardless of what's happening on the blockchain itself.
So it's about clarity, about who's responsible for what, even in a system that's supposed to be, like, ownerless.
Exactly. And it's not just about having a plan. It's also about communication.
Right, because if something goes wrong and people don't know what's going on.
It creates panic. Transparency and communication, they have to go together, especially in the crypto world where things move so fast.
It's about trust, really, isn't it?
Absolutely. Trust is the foundation of any financial system, whether it's blockchain or traditional banking.
Couldn't agree more. So we've covered a lot of ground today, haven't we? We looked at how MiCA is addressing sustainability, transparency, and business continuity in the crypto space.
It's a lot to digest, for
Yeah.
sure, but it's a really important conversation to be having right now. The EU is taking some big swings here, and it'll be interesting to see how it all plays out.
Absolutely. And who knows, this could be a model for other countries trying to figure out this whole crypto thing.
For sure, the eyes of the world are watching.
That's for sure. Well, thanks for joining us on this deep dive into MiCA. Until next time, keep exploring, and we'll see you in the next episode.